I forgot to put the thumbnail up, so we're all like stretching and getting ready, pumping ourselves up at the beginning of this video. Happy Friday, everybody. Thanks for joining us again here for another episode of Swan Signal Live. I'm here with my co-host, John Haar. Jason and Isaiah are with us today from the Swan Private squad. All right. You know, it's never a dull week in Bitcoin. Sometimes it's like, what are we going to talk about? And it's like a Monday or Tuesday, Wednesday. So I'm like, what's happening? And then something like, you know, massive crash on a Friday afternoon happens. And, you know, it was after the show started. I think it started during last week's show, but it definitely got a lot worse after the show had ended. So maybe we can just kick off with a conversation about this crash, where we are right now, down at 106, and you know, what happened, just the absolute carnage that happened with crypto that day. And this is I was trying to find a great image or visualization of what happened to the crypto landscape, and I had one in mind, but I couldn't find it. This one is great, but it is about I don't know, probably not quite at the bottom of what actually happened. And all of these are, you know, in the like 30, 40, 50% drop range, but a lot of them went down 60, 70, 80, 90%. This was obviously earlier on what happened, but it's still, the visualization still applies. Everything was down an insane amount in crypto. Bitcoin went down about 10% by comparison. So gentlemen, what do you guys think about what happened here? We're down at 106 now. People are wondering if, you know, we got that double top similar to what we did last time. Both got up to 124, 125, 126 twice, with a few months in between the double top. And that was the end of the cycle a few years ago. Now we're seeing a similar price action here. There's talk of price suppression, and there's talk of insider trading. We've got that one huge, massive short where someone ran away with $180 million. You know, the common and fun speculation is that it was Barron Trump who made this happen. And who knows? Maybe it is.
It's always Barron. It's always
Barron's like whispering in his dad's ear, you know, Dad, tank it. The timing was impeccable, right? Because it was like the short was placed literally like a few minutes before Trump's tweet, and then a couple of days later, Trump, kind of reverses course on that tweet, and the market goes back up. So maybe Barron was satisfied with his $180 million. Actually, don't know if it's Barron or not, but it's fun. It's fun. What do you guys think? How did this thing make you feel? Did you have any visceral like response to this? I mean, I was like, I'm just so numb to this stuff now, and it really just didn't bother me. I was like, fine, even if it is a double top and it's over, fine, whatever. It's just, it is what it is, and you just roll with it. What do you guys think?
I'll start with a quick one, but I want to hear from the other guys. I saw a great clip resurfaced of Saylor talking in 2024 about, imagine a guy who's trading Apple stock at like a price of, you know, $1.25 to like $2.70, and like getting all worked up about all the moves from, you know, that dollar price to this dollar price. No, I got in, I got out, and oh, I can't believe my portfolio went down by this much. And Saylor's like, you just want to shake the guy and say like, none of this matters. It doesn't matter. That's how I kind of feel about this stuff. Obviously, for any investment, Bitcoin included, if something happens that shakes your thesis, like a total game changer to the reason you got in, then you have to evaluate that. You should always be evaluating those things. But I think it's safe to say the thesis is intact. Literally nothing has happened that has changed my Bitcoin thesis. So the fact that the price went from, what'd you say? It was October 6th was a Monday, 2 Mondays ago. We hit an all-time high of roughly 126K. That Friday we started falling and kind of have been falling since then. None of it changes my thesis. Obviously, you know, it's interesting to talk about the headlines, but the thesis is intact.
Yeah, I would definitely echo that. This hasn't shaken me personally. I was around for FTX, you know, and I've seen a lot bigger drawdowns than this. And it's like John was saying just now. If you kind of just zoom out, and I know we say that all the time, zoom out, but looking at the 5-year chart, like we're up 834% in 5 years. Very, very few investments do that for you. short-term volatility is part of the game. I think what happened was probably spurred by the tariff thing last Friday and then got worse and worse as a deleveraging thing. A lot of leveraged longs were liquidated. Fear and greed index for Bitcoin's like 22 today. So lots of fear. Goodbye time. That's my view.
If you think that the top is in, I have some oceanfront property in Arizona to sell you, is what I would tell you, from my friend George Strait. And I've talked about on this show that I would be in the camp of more volatility than less. So it should be expected. And I think the folks that continue to say like, hey, volatility is going to be squished and like it's going to be, this like slow grind to whatever price that someone wants to throw out there. I just don't think that happens. I think Bitcoin still can move and move aggressively. I still think the skew of the volatility is to the upside. So similar to everyone else, unshaken, because I think John was very, smart to say it. Nothing's changed with the thesis. I look at gold and I'm like, yeah, that's what Bitcoin's going to do. Likely in 26, in my opinion, is going to fall into that move. And there's just some really interesting things going on in that market. And a lot of the thesis for the gold and silver and other kind of metals and rare earths moving the way that they are is, people are waking up to this like hard asset over financial assets. And then the other thing is, for those that are familiar with the Mayer multiple, which is kind of just a sentiment indicator from that standpoint that I personally like, is just look at the current Bitcoin price over the 200-day moving average. If it's sub 1, you should probably be buying Bitcoin. It's good to maybe increase your DCA, good lump sum. We're sub 1 as we're recording this, so that's typically a really nice time to buy some Bitcoin. And the average for Bitcoin over its history is like 1.3. So, we're at a good spot to continue to acquire. I don't think the story's changed. We'll talk about it more, but the Fed is giving up a little bit and saying, hey, we're going to ease. We're going to cut interest rates. Like the kindling for Bitcoin and risk assets to do well is still there. It's good to get a liquidation event in there and get people kind of wiped out that are doing some things that are foolish. But if you buy Bitcoin, you hold it, you don't use leverage. These are just moments that you can add a little bit as you're able. And I think that's a beautiful thing historically. And if you give yourself 6 to 12 months from now, you'll probably be really happy that you're acquiring at this level.
Let's take a look at, I've never done this before. We look at a lot of charts, but I've never brought up TradingView before. This is the 1 week chart. So each of these bars is 1 week in the price of Bitcoin. And you can see here that we're not, even to combine these two, we've had in March of 25, in, July of 24. And there's a few more here too, bigger weekly drawdowns than we've had this past week. We are down less than 10% on the week. I'm looking at the Swan app here, which is a great chart. We are down 8% on the month, up 58% in the past year. That's 15% year to date, and then up 838% over the past 5 years. So this is some typical stuff. And here's the monthly chart to look at. So stop the screen share. Hold on one sec. This is the monthly chart looking at, here we go. Longer view going back to 2015. This includes that 2016, 2017 run. And you can see just a tiny little red spot over here. And we've had much bigger monthly drawdowns. We've been talking a lot about, lower, drawdowns, right? Like 30% sort of max drawdowns, moving toward that because we have so much institutional and professional asset trading and accumulation and management services, companies that are into the space now. There's a lot of sort of built-in DCA beyond just the retail and the Bitcoiners DCAing. These are going into portfolios, retirement portfolios, and investment. What is the word I'm looking for, John? Just investment products, where Bitcoin is kind of getting passive investment into the network. And we'll see here. We haven't even come close to that. That would, we'd have to go down. I guess we're somewhat close. Where are we down? 20% from the top? Is that right? 18% from the top?
Yeah, I don't think it's quite been 20 yet. Yeah. So it's not even considered a bear market in traditional finance.
18-ish% from the top. So we'll see if we go down another 12, 15%. We're going to be flirting with my thesis that we're not going to see, more than a 30 or 35% dumps at a time anymore. So maybe we'll get to test that out. We'll see. Scoop up some cheap sats.
One other comment before I forget, which is prone to happen. When you pulled up the chart on just crypto in general, there was like no bid for so many of those assets. And people that actually manage institutional capital or big pools of capital see that and they're like, yeah, this is uninvestable. And then you look at Bitcoin and the way it responded. And I do think that there's some signal there. And that does catch the attention of folks of looking at, yeah, there's volatility, but it's extremely liquid and it's not going basically no bid like a lot of those things did. So
Right.
I think that's an interesting point.
Yeah, good stuff.
I'll just add, I just to be a little more definitive with my current view. I appreciate that Isaiah was more definitive where he's saying this is not a top. I'm in that camp as well. I would liken what's happening now much more to what was happening last year. If you guys remember, after the ETFs came out and that initial fake out, then we ran up to 70K. But then throughout the year, we bounced back and forth from like 58K to high 60s, 70K, like 5 or 6 times. And then obviously later in the year broke out to 70 again, 80, 90, 100 for the first time. So that's what I kind of liken this to. I don't read too much into trading within like a 20% range. There's reasons in the market that things are volatile right now. But when I think of like cycle tops, let's just list off a few things that were happening at the last cycle top when things really started to roll over. Highest inflation in 40 years, fastest Fed rate hiking cycle ever. Crypto collapses were being uncovered one by one. Terra Luna, Celsius, Voyager, BlockFi, FTX.
Oof, that was rough.
All of these things are happening. The S&P is down 20% on the year roughly in 2022. The Bitcoin ETFs did not exist. BlackRock was not singing the praises of Bitcoin. That was the environment that caused us to have a blow off top and a terrible year of performance after that. I think things today versus everything I just listed it's totally night and day.
And we're actually, let's talk about this right now. We're entering into probably another easing cycle, it looks like. And John, I'll let you take the lead on this one. I'll just set it up for you. Fed's Powell suggests that tightening program could end soon and opens the door to rate cuts. This is some pretty big news. We've got a few visualizations here and a couple pieces of analysis from Twitter. So John, I'll give it to you to take us through this one.
Yeah, so I think this is the type of thing. It's definitely a reversal in policy. You definitely want to be careful because there are some people on Twitter who will be like, oh my gosh, this means massive QE is coming or something like that. That's not what's happening here. They're going to slow the pace of the pace of the reduction in their balance sheet, in their bond holdings, or maybe just stop entirely. So that is, something that you definitely want to consider as an investor. Generally speaking, it's better for risk assets when that is happening. But I don't think this is going to be like a blow the doors off. They're doing trillions of QE again. They've also signaled this, that would take another crisis for them to do something like that, which, people generally are not forecasting. It's hard to forecast those. But I'll just add one other thing is that, well, firstly, let's take a really big picture perspective. After the GFC happened and the Fed did like real QE for the first time since World War II era, Bernanke in like 2010 was quoted as saying, yeah, we're going to get the balance sheet back down to pre-GFC levels. Like that was the initial plan. It was like, we buy these assets, it's a temporary thing, then we eventually get them off our books. Clearly, that has not happened. That it was the Fed's balance sheet going from like 800 billion to multiple trillions. Bernanke says it's going to get back down to 800 billion. Has never happened, and we've just had more crises since then. Now we're in an environment where I think no Fed chair is claiming we're going to get back down to like pre-crisis levels on the balance sheet. If anything, you can read reports that they have done, and they don't get a lot of attention because it's like some dense Fed academic report, But they kind of show you, they're like, oh, hey, over the next 5 years, we think the balance sheet's going to go like this, and it's gradually increasing. And that's not them forecasting a crisis. That's literally just them saying, hey, the balance sheet kind of has to go up over time because bank reserves have to go up over time because GDP is going to go up over time. So they're kind of, it's a stark contrast. Like that's not what Bernanke would have said in 2010. He was like, we're getting it back down. Now it's just like, yeah, it's basically going to grow at least a little bit forever. And then the part they don't really say is, but like if there's another crisis, then it'll spike up and grow a lot more. So that's like the big picture view on Fed balance sheet type of stuff. Slow growth at the least, and potentially much higher if there's a crisis.
So yeah, talk us through this one. Does this have this is actual data going back to 2019, 2020. What is this chart showing us?
So this white line, if people are watching, this white line is the Fed's actual balance sheet, what they own. You can see it peaked around 9 trillion in 2021, early 2022. Since then, they've been doing QT for the most part. That little blip is the U.S., I guess you could call it a regional banking crisis. They kind of stopped it at a regional banking crisis. That was the BTFP, which they came up with on a Sunday, brand new acronym, brand new program. The assets they own went up. Kind of, slap a piece of duct tape over that banking crisis. And then they did continue QE. So you see that white line sloping down. But the point of the headline we just mentioned is that Powell is coming out and saying, hey, this white line's been, going down for a while now. It's probably not going to go down anymore. We're not going to reduce our balance sheet anymore. It's likely to gradually go up over the next few years. The blue line is the Fed funds target rate. One interesting takeaway from here is that a lot of people used to say that Bitcoin is only an asset that goes up when the Fed takes rates down to zero. And, people like meme stocks, and Bitcoin's just another meme stock. I think we can put that theory to bed because the Fed rose rates to, 5%. They've been high for a while, and Bitcoin keeps going up, keeps hitting all-time highs. So yeah, a lot of good information in that one. And I think the other line in that chart was Bitcoin. So those are some of the takeaways there.
Yeah, this actually chart was from a tweet from Joke and Sorty. And he said, along with the chart, he posted, Bitcoin is up 750% over the last 3 years. Wow, as Fed tightened monetary conditions. And that is pretty amazing if you think about it. Up 750% as the Fed was tightening. So the Fed funds rate went from 0.25% to 5.5%. And the balance sheet went from 9 trillion to 6.5 trillion. So now that QT is ending and the Fed's policy rates are coming down to sub 3%, Bitcoin now has the tailwinds of easing at its back, which, I think seems to me a fundamental wind for us. And I think probably backs up Isaiah's and John's and probably Jason's, thesis here that this is not over. This cycle's not over. This double top is not the end.
Yeah, I don't think it's over at all. But to John's point there, looking back at that chart, you see the response in 2020 where that line just shoots straight up and goes parabolic. And that's the crisis response. So having some easing and having that line start to gradually slope upwards, the expectation shouldn't be that it's going to be something super, super drastic like that. So I think that's useful. That's a good visual.
They're just going to DCA. That's the plan.
They're going to DCA the QE.
DCA on the balance sheet.
But it's net positive for sure.
To that point, I mean, the reaction time and how quickly things happen, like John talked about the Silicon Valley Bank, happened on a weekend, how quickly that was done. And you go back to the COVID response, and that was quick. And then before that, GFC, it took a little bit more time. Like the response times are insane. And so back to the point of the start of the show is like, if you use leverage, you can get caught on the wrong side of that. However, if you don't use leverage and you are a spot holder, even if things go to hell in a handbasket, it is national security, basically, that they have to bail out the system, and they will act so fast. And that reaction is going to be a slingshot back higher. And we saw that in 2020, right? Like whether it was the S&P, whether it was Bitcoin, you saw Bitcoin kind of be the canary in the coal mine, big drop, Swan launching. Brady, you were there, right? You and Corey on YouTube, like launched a little early to talk about, Bitcoin crashing. And then by the end of the year, you have Bitcoin.
That was the first episode of this show, actually.
25, 27K, right? Like it went from 3,500 to 27. That's a huge move, right? And why was that? Well, we had to just inject the system with so much money, and each time it is so much bigger. The big question everyone will say is like, so when does that not work? I don't know. We don't know.
So Isaiah, I've got to give a piece of interesting post from this week in response to kind of what you're saying. So did you guys see this post from this woman, Geeta Gopinath? She's part of the IMF. And she had an article in The Economist, but then she posted it herself. It's just from 2 days ago. She goes, the exposure of the world to U.S. equities is at record levels. A stock market correction would have more severe and global consequences as compared to what followed the dot-com crash. She goes on to say some other stuff, but the tariff wars and lack of fiscal space compounds the problem. The underlying problem is not unbalanced trade, but unbalanced growth. There's a need for higher growth and returns in more countries, regions of the world, not just in the U.S. So she makes a few different points there, but the main one that I wanted to highlight is that she's basically saying a stock market correction would have more severe and global consequences as compared to what followed the dot-com crash. So I think that just underscores the point Isaiah was making. It doesn't mean you can't have a reversal. 2022 happened. We should all remember that. You can have a year where stocks fall, but it's really, really difficult to envision like a multi-year bear market in asset prices, given what is going on in the world. And I think her quote underscores that.
Okay. Anything else on the Fed, QT, QE cycles?
Can we throw up that other? I think it was a Groman chart since we're talking about Fed, and So
there it is.
This one to me is pretty interesting because red line here this is showing treasuries held by the Fed that are 10 years or more in maturity. And if you look at it, it's trying to do the verbal description here for anyone who's just listening, but very low line leading up to the financial crisis. Then it goes up in 2008, 9, 10, 11, kind of only a little bit. Then it's in 2011, 12, that's when it really starts to go up. So what must have been happening, I'm just kind of jogging my memory. We had like QE1, QE2, QE3, if you guys remember. So one of the probably QE2 or 3 was, okay, we're going to buy longer dated treasuries. And that's why that line went up a lot more starting in like 2011.
And it looks like the 1 years went to 0 basically.
Yep. Yeah. They there was also like, I'm not sure how closely you guys were following these kind of macro headlines then, but there's like Operation Twist was a big thing. These were all like stupid, Fed headlines or things Bernanke was doing, but it's like changing composition of the balance sheet that gets everyone's attention on Wall Street. So this red line, the long dated U.S. Treasuries held by the Fed, it goes up a lot from 2011 to 2014. From 2014 to 2020, I'm going to call that flat. I mean, it like barely fell. It's basically flat. And then from 2020 to 2025, it's up only.
Yep.
So the takeaway for this for me is since the financial crisis, the Fed has literally never been able to reduce the amount of long dated treasuries that they hold. And that to me is incredible because that just like they would if they could, but they can't, so they don't.
It's going up forever, John.
It's going up forever. Like they would, but like that to me just screams, hey, there's not that much demand for U.S. Treasuries 10 years and longer. All of the demand is for short. Like no one wants to invest in a U.S. Treasury. They want to hold a short-dated U.S. Treasury that pays them 4 to 5% as kind of like a cash substitute. So that's an alarming chart. It's just there's not that much demand for long-dated Treasuries out there.
All right, let's switch gears over to quantum computing, and then I'm going to actually ninja launch another topic on you guys about AI and its impact on the economy and Bitcoin. So I don't know if you guys have done much thinking about this, but we got some time, so I thought we'd dive into it and see what we can come up with. All right, so this is Chamath Palihapitiya talking about quantum computing. on the All In podcast, and we'll watch this and we'll react.
I saw Sundar post it. I saw it in my feed. I ended up missing my next meeting because I had to figure out how long will it take for us to crack the encryption standards that we use for Bitcoin. Nick, here's the answer, because I was so tilted by this idea. So if you think of Willow as essentially like one stable, logical qubit equivalent in a chip, we need about 4,000 to break RSA 2048. And we need about 8,000 to break SHA 256, which is the underlying encryption framework for Bitcoin. So I think you're right. I think we're in the sort of like
the end game,
2 to 5 year shot clock. No, I mean, I think what'll have to happen is some of these chains will need to obviously re-implement something at a pretty foundational level. The weird thing, as Freeberg says, is like the Willow chip's error correction gets better the more of these things you start to use together. Now, there's some really big problems inside these chips, like logical interconnects are very complicated. If you put 2 chips on a board, like the C2C communication is all this stuff that we haven't figured out how to do. But this is a big deal. And I was really like, oh my God, what's going on?
That was hilarious with the 4 of us on the right side, and then their view, this exact same view with the 4 of them on the right side, and then we were stacking up.
Just 8 billionaires.
Yeah, right.
Yeah.
How much Bitcoin do they think they own between them? I wonder if Chamath has more invested in bottles of wine than Bitcoin. I wouldn't be surprised. So quantum computing has been, typically cited as a piece of FUD for Bitcoin for quite some time. This technology is advancing, and it will advance more and more quickly. And these things stack on top of each other. So AI will probably help out in terms of figuring out the fundamental science that we need to understand to build quantum computers. So there will be increasingly rapid advancement on every tech front, including this one. However, the 2 to 5 year timeline that he puts out there in that episode is, I think, quite incorrect. So that graphic shows, here's how many, in theory, logical qubits that we need to break ECSA and to break SHA 256. It's like 4,000 and 8,000. Now that's correct. I did verify that. However, Chamath started to get to it there at the end, even though he had said the 2 to 5 year timeline. At the end, he started talking about there's lots of problems with these things, lots of fundamental physics problems, really hard to error correct, really hard to make them fault tolerant, and really hard to do it at certainly like above almost absolute zero in order for them to kind of be more practical use cases. Of course, that doesn't really apply to breaking encryption algorithms. However, what I've seen, I asked AI to survey what all of the experts in the field are sort of, where they are, where their minds are, and give me some kind of consensus on where they are. And it came back saying that, first of all, the government has done the same thing. The US government's done the same thing. And they have a target of 2035, so 10 years from now, to be ready to update their systems and to help update the economy to quantum resistant encryption algorithms, which do exist. And Bitcoin already has quantum resistant encryption sort of tests that have been done and algorithms that have been developed. So it's not like this hasn't been thought about. There's even ideas that have been built out and executed to be able to resist quantum computing and their encryption breaking SHA 256. So the first thing that's actually at threat is ECDSA, which is used like the Schnorr signatures, and then SHA 256 is quite a bit more difficult, as that graphic showed. But that didn't really take into account the time it's going to take to really get these things working to a point where they're reliable. And I do know, I saw, and I tried to find this video on Twitter, couldn't find it, but Taj Dreja, who was the co-author of the Lightning white paper, along with Joseph Poon, and he taught classes about Bitcoin at MIT. and also loves to study AI and quantum and fusion. Those are like his three, hobbies. Like you all do, right? You're just like, yeah, my hobbies are quantum, AI, and fusion. What do you like to do in your free time? So anyway, I appreciate his opinion on these things, and he actually said that he doesn't believe there's going to be a practical quantum computer in his lifetime. I think this guy's like 30 years old. So I don't know if that's, that seems like an extreme, maybe exaggeration to make a point. But the point is like, it's going to take a while, longer than most people think. So anyway, I thought this was interesting. And I think even if Chamath was able to kind of redo that take, I think his 2 to 5 year timeline is pretty ridiculous. So that's my take. You guys have any thoughts on that?
My hot take is Chamath launches a quantum resistant crypto soon, and it'll be a SPAC, and it will do poorly.
Good take. Let's see. I got a new thing. I'm going to make this the star take of the day. There we go.
That was phenomenal.
All right.
I don't have too much to add. That was a good summary, Brady. I like to, be honest about what I'm comfortable, and confident speaking about. I have some views on quantum, but, compared to like macro and market stuff, I don't want to pretend like quantum is my wheelhouse. I also believe that there's probably not many humans on the planet who have a really good understanding of where quantum is today, where it's going in the future. And then another big one is, what are Bitcoin's potential responses to it, right? This is a dynamic network. It's not like, Bitcoin just sits there and takes it. The people at Chain Code Labs, where there's a ton of really talented Bitcoin developers, either do work there or have worked there. They put out a paper on quantum, which basically ran through all those things. Where's quantum at today? Where do we think it's going? What are the different ways that Bitcoin can respond? Also, which addresses, which Bitcoin are more at risk than others? It's not like an all or nothing type thing. But I also can't claim that when I read that paper, that I understood all of it. So I like to just be honest about the limitations on my knowledge of quantum, but I think you did a good summary there, Brady.
Yeah, same. I mean, I've scratched the surface a little bit to sort of satisfy my own concerns about Bitcoin in this regard. And I did a lot more research on it when I first got in, probably 7 or 8 years ago. And there's some good stuff out there. So if you're curious, it is cited even amongst people who don't know much about Bitcoin. They've seen this before. It's out there in the media, this idea that quantum will break Bitcoin. So it is good to just kind of get a little bit of a baseline for you to be able to talk about it if people ask you.
Yeah, just to jump in here, I think there's a meme somewhere that's like, if the sun explodes, your Bitcoin might be in trouble. And right, like you apply this to quantum. Quantum can attack everything. It can attack top classified documents at the highest levels of the military. It can attack every financial market out there. It can attack every bank account, right? And it can attack Bitcoin. And it's important to remember, like, all of these things are going to respond differently. Who's going to be the most nimble? And what are the incentives behind that? When you look at the people who are Bitcoin developers, I would say they have a tremendous amount of their own worth stored in this network. They're highly, highly motivated to start working on this, right, which they have, and get to a solution. They're personally motivated to do it in a way that like a team at JP Morgan is not personally motivated to do it. That's not to say they're not also equipped, but the incentives are extremely strong there. I'm just not worried about this. I can't go super deep on the technicalities of it, but that's kind of how my conversations go when this comes up.
Yeah. I mean, Bitcoin is a honeypot for sure. There's a $2+ trillion worth of Bitcoin out there for you to steal. But like you said, there's also way larger honeypots that are out there that you could tap into and try to steal from if you can break SHA-256. So yeah, it would be a bigger problem. Yeah, it would be a bigger problem for sure. So this is something that the entire world really needs to think about. It's like the Y2K bug, that kind of thing, where everybody's got to upgrade, to avoid this problem. And it'll be a hard fork for Bitcoin, which will be very interesting because let's look at how the debate we've had about mempool filters, right? And we're talking about a hard fork, and there's going to be lots of opinions about what algorithm to use, what new quantum resistant encryption algorithm to use. So
maybe the first time people side with the fork.
Yeah, I mean, I think everyone's going to agree it needs to be done, but there's going to be a lot of a debate about how to approach it and like what are we going to implement, because if we do it, we're probably going to be using and committed to that algorithm for quite some time, right? So,
you guys ever see the episode of The Office where Michael says, "I'm going to read the comment box, guys. I read this all the time. Every week I check what's in the comment box." And I think the episode was in like 2005 or something. And he pulls out the first comment and it goes, "Are you worried about Y2K?"
Yeah. That was such a big deal. It was such a huge deal, and then nothing happened. But I think, people, it kind of does make sense, right? Like, you just have these two character year, and then you just all of a sudden your computer thinks it's 1901 again or 1900 again. It causes problems. But yeah, I remember that year. I remember the New Year's party. I was, pretty young, early college years, I think. And we threw quite a rager, man. That Y2K party was awesome. And we all were like at midnight, like, all right, let's see what happens. We're like watching the electricity and TVs, like, computers and everything. What's going to go out? And, planes flying and, falling out of the sky and things like that. Anyway, didn't happen. I don't know if it was overblown or if we did a good job, preparing. I don't know which one it was. Maybe a little of both. All right. Okay, well, let's talk about AI for a second then. This tech is changing our lives very quickly. They're becoming more and more capable over time, and I'm using it every single day. I think you guys probably are too. Most of us watching, I'm sure, are using it in some way every single day. It has made me far more productive in my job. We are seeing impacts on new jobs on the market that have notably decreased new job availability. And I think some of that at least has to do with AI. People are quitting jobs and not being replaced, for instance. And so that's kind of slowly how I think the job market AI will kind of replace large parts of the job market. So we've got that going on, which means we might be heading towards some kind of UBI if the job force decreases by 10%. It's a massive, impact on the ability to live your life, to fund your life for 10% of American families. So have a huge impact, and will push toward some kind of social program to be able to sort of pad the fall for all of these people. So do you guys think that we're heading towards some kind of UBI system? And if we did implement something like that, there are various ways we could do it. If we did, how do you think it might impact our economy and Bitcoin in particular?
I think the short-term effect of AI is that it starts to displace some white-collar work, and we're probably starting to see that play out. I think, and this is me being an optimist about it, the long-term effect is it enables us to create entirely new industries that could not previously be created, that don't exist today, that will require entirely new roles to be filled. So if that plays out, I don't think that we have like this mass unemployment event. But I see that in the short term, there's a lot of roles that have been filled by human beings that just simply don't need to be anymore. You can have one person using AI do the job of 50 people now, which is a double-edged sword. So that's kind of my surface level take on it. I like to be optimistic about this and think that we're not going to, wind up in some thing where, so that's kind of my view.
Yep. You cut it there for a very last second, which is why we didn't laugh with you. So I don't know.
Sorry, my
couple
phone,
sentences.
my soft phone here started ringing, so I had to go and exit out of that. My apologies.
Yeah,
But
no worries.
no, I was just saying, like, I don't personally, I don't see this moving to like some dystopian thing where nobody has a job and everything's replaced by robots. But TBD, I guess.
May not be dystopian, actually. Who knows?
Yeah.
I've been reading a number of different things, and I think some of the best reporting, or at least the things that I've enjoyed the most on AI recently, has come from a hedge fund manager named Cuppy on Twitter. So I don't know if anyone's read the stuff, but I'll post it internally. But basically, he makes the case and runs the numbers of how do any of these companies make any money, because it's all kind of a circle jerk where they all are spending money. Like, you have these companies that are building on AI, but all their funding goes back to the AI provider. And then you also see utility and electricity prices going through the roof. Are people actually going to want this? And will it actually get stopped? And he and some others have made the case, similar to like the fiber optic cables underneath the oceans. There was all these companies that raised a ton of money to do all that, and they basically all went bankrupt. And then people came in and built it out, or they made businesses on it. But there's literally no way that they can fund at this level forever. And there's like, are people going to be able to pay $20,000, $30,000, $40,000 to use ChatGPT? And then, so does it start to limit it to where the impact is maybe smaller, or does it change? And how sustainable is this? And I think that, to me, is actually a very interesting point. And then, is there a social element that just says, hey, we're going to change or nix some of this? It's here. It's going to make an impact. As far as what it does for Bitcoin, if we go into UBI and we just continue to create, free government bucks, like we've done for a variety of other programs, but they come out to people, like, it just continues to make life more expensive. It's not like we found some secret hack to all of a sudden make things more affordable. I think Bitcoin will insulate folks from the cost of living impacts. Housing's not going to get cheaper if there's UBI. All these other things, like, that's not the answer. It'll feel like the answer, and I think it also brings into consideration from a from each country, like how do they solve for that in countries that are voting in more democratic. People like to vote for free stuff. And so, is that a good thing? Is that a bad thing versus other countries that are more authoritarian? And so there's like a lot of interesting things where the future is very muddy and cloudy. And I think it's hard to have a really strong stance, but I don't know if I like, but I think it's very interesting to think about the economics of AI literally don't work. And this is something that no one's talking about. And in the pieces, even people in the industry that are trying to get rid of their shares in these different companies, if they work there, they're making a ton of money, but they're making no revenue. And they basically are selling as soon as they can get their hands on the shares to liquidate, to go make theirs, which, don't blame them. But everyone thinks that everyone else understands how they get to profitability, but no one actually understands it. And so it's all just everyone else thinking someone else knows how to do it. And it just doesn't feel very sustainable at all. And so I think we're if we want to talk about tops, maybe we're in AI fundraising tops, and maybe it changes and cools off and or adjusts from here.
That movie Election makes me think of Election with Reese Witherspoon, where she's like, vote for me and I'll give you a cookie, and it works for her. Yeah, I think this is just a fascinating topic. Everything's changing, and it's going to just go faster and faster and faster. We're on the asymptote now, and there's going to be incredible changes for humanity over the next couple of decades, and AI, quantum, will be leading the way in terms of the change. All kinds of stuff too in healthcare and tech, and Neuralink, what Elon Musk is doing with Neuralink. People will get these implants, and there'll be sort of this fork for humanity where you're either enhanced or you're not. Kind of like the Amish, and people will choose, like, I don't want to have this like internet connected device implanted in my brain. Like, that's this really fundamental choice about what kind of like entity do you want to be. Do you want to be a biological entity, a human, we've maybe a legacy human, people will call it if they're trying to diminish it a little bit, or will you be an enhanced human? And the enhanced humans will progress faster and faster and faster as they interact, with AI and stuff at a much higher bandwidth. So all of this stuff is coming, and the bottom line is, as you watch this future and all this uncertainty, is buy Bitcoin. Bitcoin is money made for this economy, this kind of deflationary economy, because tech is just taking over everything. And so it's all going down in price over time and becoming more powerful per dollar over time. So there's two books that I've read that really shaped my thinking about this, because I lived in a sort of dystopian, depressed mindset for quite some time before Bitcoin. And I read Abundance by Peter Diamandis, and then I read Jeff Booth's book. and the price of tomorrow. And both of them have this optimistic view of all this deflationary exponential technology. And of course, and Jeff talks about how Bitcoin relates to all of that stuff. And so I would check out both of those books, especially if you have some anxiety about all this uncertainty. And it should be interesting. Let's go with a couple of quick hits, unless anybody else has a thought there before I move on.
I'll just weigh in quickly because I didn't say anything about the AI topic yet.
Yeah.
I would say number one, I think it's a good thing. Any type of product, we often hear this term productivity miracle. That's generally a good thing. That's one of the ways you get out of this fiscal dominance debt problem, because that problem demonstrated as a ratio is debt to GDP. Productivity miracle means you're building the denominator, you're building GDP the right way. You can build GDP through inflation, or you can build GDP through productivity. Productivity is the good one. So in that sense, I think AI, robotics, all these efficiency gains are great. The sense that I don't think it's so great is if it comes too quickly, if it displaces too many workers, that would not be good for society. And it's hard to say how all this plays out. I think we were likely, if we're just talking about UBI, I think we were likely on a path towards UBI regardless of AI and robotics. Like, people were talking about that, and they were not for years, and they were not saying it was because of AI. That just gives them another reason to say, yeah, this is why we need UBI. I think I am a little bit of a pessimist on this one. Even if we worked it out in a way that the machines were doing everything for us and they were so productive, it's like, I want to believe that people will, work on a passion project and spend time with their family and be super healthy and do all these things because the machines are doing everything for us. I don't really believe that. Unfortunately, I think people need meaning and they need purpose, and people just kind of getting UBI. And maybe I have a straw man argument here, but people kind of getting UBI and not having a job, not having a good community because of that. I think that could lead us to bad places. I know there's answers to these things. So Brady, if you want to give the optimistic case to my kind of pessimistic take there, I'd love to hear it. But yeah, I think we should be open to AI, making the economy and production much more efficient and effective. But there definitely are some risks and some downsides.
Yeah, there are. There's always risks, but I sort of tongue in cheek defend UBI. Is this what you're talking about? Is John, you're talking about my take on UBI in particular?
You were kind of saying that there are more optimistic takes of how this all plays out, whether it's the Peter Diamandis abundance or Jeff Booth. I was looking at it from the perspective of like, okay, even if the AI and the robotics and the machines are doing everything for us to the point where we actually agree as a society that UBI makes sense, I'm very skeptical that people receiving UBI will use that in a good way. For productive passions and the arts and learning and being healthy.
Or to buy Bitcoin.
I just have a really hard time seeing that people are put themselves in a better position. After getting UBI.
Yeah, no, that's true. My rationale for it is kind of a sense of justice, because the rich and wealthy and biggest, most powerful corporations in the world have been getting a UBI of sorts. Monetary socialism. They've been benefiting from monetary socialism for a long time, since fiat money began in earnest in 1971. And okay, we're here at the end of the collapse of the dollar. We're getting close to it, right? So can you just throw us a bone? Throw some of these, the plebs, a little bone here and give us a little bit of that money that you've been giving out to all the rich people all these years. So that's where I'm coming from. I agree. I wish, I think it would be a great way to kind of bootstrap Bitcoin and get it distributed much more broadly if we could just give Bitcoin to a bunch of people. Yeah, a lot of them will sell it and use it for something else, but many of them might not. That might actually help people get Bitcoin and save for the future. I think giving them dollars, you're going to have a much lower rate of people using it to buy Bitcoin. for instance, but that's never going to happen, so it doesn't matter. All right. A couple quick hits here at the end. I know, Isaiah, you have to bounce for a call, right? So feel free to drop whenever you need to. This is, we've heard a rumor about Saylor on Rogan, which has been requested on Twitter for a very long time now. And we don't know if this is true. I think John has heard from a somewhat reliable source, a secondary connection, that it's not. Is that right?
That's the latest I heard, is that this episode taping did not happen. Doesn't mean it won't happen a few months from now, but don't be holding your breath waiting for and refreshing the Rogan podcast feed over the weekend.
Yeah, it would be fun though. And then we have Larry Fink on 60 Minutes. This show gets about 10 million viewers per episode, so it's pretty cool to see him talking about Bitcoin, although it's quite a hedged commentary. But we'll just take a quick look.
I did say Bitcoin, because we were talking about Bitcoin then, was the domain of money launderers and thieves. But the markets teach you have to always relook at your assumptions. There is a role for crypto
Bitcoin
in the same way there's a role for gold. That is, it's an alternative. For those looking to diversify, this is not a bad asset, but I don't believe that it should be a large component of your portfolio.
All right. Well, there you go. It's kind of a mid endorsement, but it did get seen by about 10 million people, which is pretty great. And Larry Fink is CEO of what isn't it the largest corporation in the world, or maybe behind Saudi Aramco or something, but it's largest asset manager in the world, $10 trillion plus, right? Okay.
Getting the word out to the normies. I think that's a big deal.
Yeah.
Also, Elon, I'm not sure if you're going to hit this, Brady, but Elon had a positive post on Bitcoin, just as a
I
quick
forgot
hit.
to pull that, but yeah, he responded to somebody, and he said that this is why Bitcoin uses energy, because you can't fake energy, right?
Yeah,
which is cool. His understanding of Bitcoin seems to be coming along a bit, and he's not selling his corn at SpaceX or Tesla, so there is that. And I'm sure he thinks it's better money than the dollar. Whether or not he thinks it's better money than Doge, still up for debate. But all right, thanks everybody for joining us again. We'll be back next Friday. 2 weeks from now will be White Paper Day, and we're trying to get a fun guest on for White Paper Day, so look forward to that. We'll be back next Friday with a couple other members of the Swan Private squad, and I will just leave you with some thoughts about Swan real quick. So we do help all of our clients build wealth with Bitcoin, build wealth for their families beyond their generation, the generations ahead of them. We build strong relationships. We have a very ironclad security system. We're SOC 2 Type 2 compliant, which means that our security is continuously reviewed and audited by entities that specialize in those audits. We also do lots of really fun events, both IRL and online, and we produce research and content like Swan Signal for our clients. And there's also some exclusive content that we send out to clients as well. Like I said, these guys are with Swan Private. This is a concierge service. You get paired with a Jason or an Isaiah or a John, and they are your Bitcoin experts that you can call, text anytime with questions. They'll help you make decisions, help you answer concerns. They'll help your family and friends out if you want to send them their way as well. We have institutional level liquidity. We have retirement accounts, inheritance and estate planning, tax loss harvesting. We even do some treasury servicing. We have Swan Guard and Swan Safe and Swan Vault, all as custody solutions. Swan Guard is our security layer. It's our proprietary security layer on top of Swan Safe, which is our segregated custody solution, where we work with regulated financial custodians. and they're segregated between Swan and the regulated custodians. This is a typical, I'm not typical, but a best practice in the financial industry. So we bring that to the Bitcoin industry. And we also have Swan Vault, which is our self-custody solution where you don't have to go it alone, but you have control, complete control over your Bitcoin. And here's some of our events. I'll go really quickly to Vault as I was just talking about it. Here's how it works. You can check out this page, but you need 2 of 3 keys. One of them is in your account, managed in your Swan account. So maybe I want to use that one because it's pretty convenient to get to. And then I'll grab one of my Blockstream Jades, which is a hardware device that you will keep maybe in a safe at home, and then one in a bank vault or in a safe at your office or something. 2 geographically distributed places, so you cannot, access your Bitcoin in one single location. If you use your cloud key, it'll be a 72-hour hold for security reasons. If you want it instantly, you can use your 2 Jades, and that'll be broadcast out to the network. We've got a great video here with Lynn Alden, Adam Back. We've paired with Blockstream to bring this product to life. So check out these videos as well. Here's the IRA product. You can check out everything that we have to offer here, and you can just set up all of your assumptions here and change this this chart that will show you how much your retirement account can benefit from adding a certain allocation of Bitcoin. So this is really cool. Check that out on swan.com, all of this stuff. You can also get the Swan app in your app store. Just search Swan Bitcoin. The app is super fast, super convenient way to buy, sell Bitcoin, start an IRA account, start a Vault account, etc. So check out Swan app in the app stores, and we will see you all next Friday. Thanks, everyone.